Welcome back. Hope you're having a good morning. So far, the GIFT Nifty is indicating that the start will be in the red. It's not as bad. The implied opening actually is not as bad as what we've seen in the past couple of days. But let's see, we are in a bit of a corrective phase, so don't be surprised if we get a bit of a downtick today as well. But let's start with some numbers. Yash is joining in. He's tracking ICICI Lombard. Yash, how did the numbers look?
Good morning, Sonia. So, month after month, this particular quarter, we've been telling our viewers that the numbers were looking like outperforming the industry, and that's what's happened in the Q4 results as well. As far as net premium earned is concerned, that for the company grew by 17%. Now, this is an outperformance of about 400 basis points when it comes to the industry average. So, that's a good thing. And it's not just the premium growth which has come about this time, but operational performance has also shown a very strong growth. As far as underwriting loss is concerned, that is down about 7.5%. The loss has come at about 232 crore versus 251 crore. Importantly, combined ratio, the most important metric, that has lowered to 102.2 in Q4 versus 104.2 last year in the same quarter. The management has given a very strong statement on combined ratio, saying that by next year, fourth quarter, they'll be able to reduce it further by about 50 basis points. So that will be very positive for the stock and the company. The company has practically managed to improve its underwriting performance wherever there hasn't been a very strong growth, and in health, it's improved its growth as well. So, of course, a very balanced performance and strong Q4 numbers for ICICI Lombard.
All right, Yash, thanks very much for that. So we'll track the stock as it opens up. Now, AngelOne is the next one we are focused on with the fourth quarter review. Vamakshi's got that. Vamakshi, hi, morning.
Well, good morning, Prashant. A strong show from AngelOne, I would say, in the fourth quarter. Revenue saw an uptick of almost 28% sequentially, coming in at 1,360 odd crores. And this was largely driven by the highest number of orders that the company recorded at almost 47 crores, which is an uptick of almost 35% sequentially. Not only that, given the highest number of orders, the fee income has also seen a surge of almost 31% sequentially, coming in at around 1,109 odd crores. EBITDA has grown by 33%, and that is because the growth in revenues has outpaced that in expenses. Fees and commission expenses were up 22%, while employee expenses were up 12% sequentially. Now contrasted with the revenue growth and fee income growth of almost 28% and 31% sequentially. And as a result, the margins have also improved for the counter. They've improved to almost 39% and in fact seen an uptick of almost 150 basis points. Net profit resultantly has come in nearly 31% higher, standing at 340 odd crores. So good show from AngelOne. Expect the stock to open higher today.
And the stock has been an underperformer. Year to date, AngelOne is down 18%, and from its 52-week high, the stock is corrected 26%. So can a strong Q4 push up the stock and recover some of the underperformance? I'm watching two other stocks. One is Tata Communications and the other one is Just Dial, both on the back of their Q4 numbers. So first on Tata Communications, the company has reported a margin miss and a bit of a miss on the top line too. Margins have fallen by 160 basis points on a quarter-on-quarter basis and more than 400 basis points on a year-on-year basis. The reason for the margins coming under pressure is because the company had recently acquired, not so recently, a couple of months back, they had made two acquisitions, Kailera and Switch, and those are reporting EBITDA losses. So margin miss is what can hurt Tata Communications. Even on the top line, the revenue growth is just 1% on a sequential basis. Just Dial, on the other hand, has reported a good quarter. A revenue growth of 16% year-on-year. Margins have expanded to a 4-year high at 26.1%. There you have that margin trajectory on Just Dial. Profits have gone up 25% year-on-year, and this is a company which is sitting on cash of more than 4,600 crores.
Okay, thanks for that. Well, let's move across to the real estate space. We have some updates coming in from Suntec Realty and Brigade Enterprises. Sonal is here to give us the latest on that. Sonal, hi, good morning.
Good morning, Sonia. Well, operational updates are still coming in. Let me start with Brigade Enterprises. It was the best quarterly sales for the company, and in terms of yearly sales as well, it was the best ever year. On a Q4 basis, pre-sales are up 53% to come in at 2243 crore rupees. Volumes are up 18%, and the company says they have a strong pipeline in terms of launches as well. Around 12.6 million square feet in their residential segment, 6.33 million square feet in commercial, and 1.06 million square square feet in their hospitality segment. For Sunteck as well, pre-sales growth was strong, up 26%, and this growth has come in after quarters of decline that we have seen. And that's why I'm going with green on Sunteck. Collections, however, were down 32%. The company says they added 7 large projects in the Mumbai region with a gross development value of 30,000 crore rupees, which should see pre-sales coming in the next financial year.
Thank you for that. Moving on to Ekta for more on Biocon and Jubilant Pharmova. Ekta.
Well, I'll start with Biocon because after their launch of liraglutide, which is a GLP-1 drug for diabetes in the UK, they have now signed an exclusive license and supply agreement for the generic version of the blockbuster drug Ozempic, which is basically semaglutide, with a Brazilian company, Biome SA, for Brazil. Now, Biocon will undertake the development, manufacturing, supply. Biome will be responsible for the regulatory approval as well as commercialization. Remember, semaglutide is basically used as used for diabetes. It's a GLP-1 drug. Market size is $580 million in Brazil. But we all know the kind of traction Novo Nordisk's drug has got globally, and the entire segment is expected to probably touch $100 billion by 2028. So that's the kind of potential that we're talking about, or 2030 globally. Now, the other one is Jubilant Pharmova. They have decided to close manufacturing operations of their formulation facility in the US. Now, their subsidiary in the US will continue sales and marketing activities. Company has indicated the extreme price pressure that they faced in the US resulted in significant losses in their generics business in FY22 onwards. So they're changing their model to in-house manufacturing, from in-house manufacturing to an outsourced manufacturing in the US. Separately, their Roorkee facility has received a VAI, so that should help in terms of compensating exports to the US. Overall, they will also look to sell off their land, which basically had the US facility. So that'll probably take place sometime later. So that is something that the street will watch out for. Expect both these stocks to be in the green.
All right, Ekta, thanks very much for that. Well, Ambuja Cement is the next one we want to focus on. Sudarshan has got details of this one. So, good morning.
Morning, Prashant. So, promoter Adani family has completed the warrant subscription, and with this, total fund infusion increases to rupees 20,000 crore and holding of the promoter increases to 70.3%. In the latest tranche, warrant worth 8,339 crore is subscribed. Earlier in October 2022, promoter had infused 5,000 crore and in March 2024 had infused 6,661 crore. So what will this fund be used for? Company says it will be instrumental to achieve 140 million tons per year capacity by 2028, and fund will also enable strategic initiatives including debottlenecking the capex. Commenting on the same, the CEO says fund infusion provides capital flexibility for fast-track growth, capital management initiatives and balance sheet strength.
Okay, thanks for that. Well, let's go across to Abhishek now. He's going to track, he's tracking IFL Finance. Abhishek, why is that?
Well, IFL Finance has announced a right issue. So, for one share will be issued for every 9 shares that you held in the company. In terms of total fundraise, it's close to about 1,272 crores, which is being priced at rupees 300 per share. So, this 300 per share is at a discount of around 30% to the CMP or last closing price of IFL Finance. Calculation shows that equity dilution could be around the 11% level, 11.1% to be precise. And CRAR, that is capital adequacy ratio, that can increase by 2.25% to 2.5% depending on where their RWA stands, which will lead to close to CRAR of 22%. So this fundraise would actually help them in terms of controlling their cost of funds. We are in a rising interest rate scenario until and unless the funds are used for provisions. Back to you.
All right, very helpful there. Thanks a lot for that. Well, let's do a quick recap in case you missed out on any of these stocks. Stocks with positive news flow, there's ICICI Lombard, Just Dial, Brigade Enterprises, Sunteck Realty, Ambuja Cement, IFL Finance, Biocon, Jubilant Pharmova and AngelOne. While the only stock on our radar with negative news flow and of course because of earnings is Tata Communications. But let's also get a quick grip on what's happening in the world of commodities, because Brent crude, after rising for many days, has finally softened a bit, much to the relief of investors. But Manisha Gupta is here to give us a roundup of all of that. Manisha, morning.
Thank you for that, Sonia. Well, we had a truncated week, but in the U.S. markets yesterday, we did see crude oil prices decline by 3%. So we are trading below 90, and 87 is where we are resting right now. The reason for such sharp decline is the EIA report, which is suggesting that the U.S. crude inventories have surged by 2.7 million barrels. This is much higher than what the street was anticipating. But then again, there are reports about U.S. looking to reinstate oil sanctions on Venezuela. The European Union is talking about fresh curbs on Iran. So these factors will lead to some buying back coming in case of crude prices. But the only space that has continued to shine bright has been the metal sector. Of course, the precious metals are doing well, but the ferrous metals, the base metals also seem to be surging fine. Copper is trading 0.5% on the higher side right now. Aluminum prices have surged to a 22-month highs, and the laggards like iron ore are trading on the positive side. Even the steel prices firmed up by 2% in early Asian markets today. So the anticipation that demand is improving, better economic data from the global manufacturing markets, all of that seems to be supportive.
All right, Manisha, thanks very much for that. Commodities and metals have been doing good, and we'll track them this morning as well. We'll take a quick commercial break here. Deepan Mehta of Elixir Equities will join in for some stock-specific commentary on the other side. Stay tuned.